Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Iradimed Corporation Annual Report. Iradimed Corporation offers a range of medical devices and services that are compatible with magnetic resonance imaging, MRI technology. Their products include the Iradimed MRI-compatible IV infusion pump system, patient vital signs monitoring systems, and ferromagnetic detection devices such as the 360 FM DUN. In addition to these devices, Iradimed also provides non-magnetic IV poles, wireless remote displays and controls, sidecar pump modules, dose error reduction systems, and SB-OTWO monitoring with sensors and accessories. These products cater to the needs of hospitals, acute care facilities, and outpatient imaging centers. The company sells its products through a variety of channels, including direct field sales representatives, regional sales directors, clinical application specialists, and independent distributors. With over 2 decades of experience in the industry, Iradimed Corporation has established itself as a leading provider of MRI-compatible medical devices and services. Iradimed Corp's stock price has skyrocketed over 92.73% in the past year due to a combination of factors. The company's consistent record financial results throughout 2025 were a major contributor to its growth. Iradimed reported record revenues and earnings per share, EPS, for each quarter of 2025, with significant increases compared to the same period in 2024. The FDA clearance for the next-generation Iradimed 3870 IV infusion pump system was another key event that drove the company's stock price up. This innovative product is a unique offering in the medical device industry and is expected to contribute significantly to Iradimed's revenue in the second half of 2026. In addition, Iradimed's recognition as a growth leader by Time magazine and its strong shareholder returns also contributed to its growth. The company paid a special cash dividend of $0.50 per share in December 2025 and increased its regular quarterly dividend to $0.20 per share. Management provided optimistic guidance for 2026, projecting significant revenue growth and EPS increases. Finally, the analyst price target increased by 21.21% to $122.40 per share in February 2026 further boosted investor confidence in Iradimed's stock. Overall, these positive news events and strong financial performance have driven Iradimed Corp's stock price up over 92.73% in the past year. Iradimed Corporation market capitalization of $1 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Iradimed Corporation holds a significant advantage in their industry. Iradimed Corporation trades at a higher price-to-earnings ratio of 56 times and a higher price-to-book ratio of 13.29 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 12% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth and decline can be identified from various sources. On the growth side, the introduction of new products such as the Iradimed 3870 MRI-compatible IV infusion pump system in 2025 has been a significant contributor to revenue increase. Additionally, expansion of product offerings with optional upgrade accessories, increased adoption rate of MRI scanners in acute care facilities, and sales data from the U.S. market have also contributed to growth. Furthermore, changes in customer behavior, technological advancements, regulatory changes, and competitive landscape have all played a role in driving revenue upwards. The expansion into critical care departments within U.S. hospitals has also been a key factor, as well as the launch of new complementary products and updates to existing ones. On the decline side, negative publicity related to product safety issues has had a significant impact on revenue. Changes in U.S. healthcare policy, such as the Patient Protection and Affordable Care Act, have also led to a decline in revenue. Increased regulation by FDA and other authorities, funding adjustments that impact Medicare or Medicaid, and healthcare fraud and abuse regulations have all contributed to a decrease in revenue. In terms of specific numbers, an increase in sales volume from 11,621 IV infusion pump system channels in 2024 to 13,098 in 2025 has been noted. Growth in international sales through third-party distributors has also been a contributing factor to revenue growth. Net income experienced fluctuations over the period in question. Initially, it increased from 26.3% to 26.8%. However, this trend was not consistent, as net income also showed an increase without a specific amount mentioned on page 53. The highest net income recorded was $26.1 million in 2025. Profit margins underwent significant changes during the period. On one hand, gross profit margin remained relatively stable at around 76–77% for both years ended December 31, 2024 and 2025. On the other hand, operating income margin increased from 30% to 31.2%. However, there was a decline in profit margins due to higher general and administrative expenses, as mentioned on page 42. The changes in net income and profit margins can be attributed to various factors, such as fluctuations in revenue and expenses. The increase in total revenue by $10.6 million, 14.4%, from $73.2 million to $83.8 million, with gross profit increasing by $8 million, 14.2%, contributed positively to the net income. However, higher general and administrative expenses led to a decline in profit margins. The company's financial performance indicates a steady generation of positive operating cash flow. Despite a slight decline from $25,624 in 2024 to $24,947 in 2025, the net cash provided by operating activities remains substantial. This demonstrates the company's ability to generate sufficient funds from its core operations, even if at a slightly reduced level compared to the previous year. The performance of various segments and regions has been a key area of focus for the company. In terms of revenue growth, the United States segment stood out as a top performer. The region saw an increase of $9,951 in revenue, representing a significant jump of 16.4% from 2024 to 2025. This impressive growth was reflected in the contribution percentage, which remained steady at 84%. On the other hand, the international segment struggled with declining revenue. Despite a slight increase in overall revenue, the region saw a decrease of $621, representing a decline of 4.9% from 2024 to 2025. This poor performance was also evident in the contribution percentage, which dropped to 16% in 2025 from 17% in 2024. The stark contrast between these two segments highlights the need for targeted strategies to address the challenges faced by the international segment and build on the success of the United States region. The company's management is optimistic about its outlook and strategy, with a focus on expanding its product line and increasing sales globally. The key objective is to improve patient safety through uninterrupted vital signs monitoring during MRI procedures. To achieve this, the company will invest in research and development of new technologies, such as TrueSense threat qualification technology, and expand its deployment of MRI-compatible devices within critical care departments of U.S. hospitals. Management plans to drive awareness and education on the benefits of MRI-compatible products through direct selling efforts in both domestic and international markets. The company aims to lead the market by developing and commercializing a portfolio of MRI-compatible products, accessories, and services, To achieve this, it will expand its product offerings through internal development and potential acquisitions. While there are some key risks that could impact the company's performance, including weakening economic conditions and geopolitical risks, management remains confident in its ability to navigate these challenges and drive growth. Overall, the company's strategy is focused on innovation, expansion, and customer education, with a clear objective of improving patient safety and leading the market in MRI-compatible products. The company has a history of rewarding its shareholders through various means. In terms of dividend payments, the company initiated regular quarterly dividends in December 2023 and has since paid out $0.20 per share on a quarterly basis as of February 2026. Additionally, special cash dividends have been paid on 4 occasions since 2022. In terms of share buybacks, the company has made efforts to repurchase shares from its existing pool. Specifically, it has repurchased 24,434 shares, indicating a commitment to reducing its outstanding share count and potentially increasing shareholder value through this means. Concerns about inventory buildup or supply chain disruption are prevalent throughout the extracted summaries. One major concern is the reliance on single suppliers for raw materials and parts, which can lead to global supply chain issues, international trade restrictions, and tariffs, page 18. This vulnerability is further exacerbated by excessive demand creating shortages of available supply. Regulatory actions, enforcement actions against suppliers, disruptions from inspections or facility shutdowns, and withdrawals or suspensions of current products from the market also pose significant risks to the supply chain, page 22. The company's dependence on third-party suppliers for certain raw materials and components adds another layer of risk, page 25. Furthermore, long lead times or delivery periods, regulatory requirements, and changes in international trade treaties and tariff rates can all contribute to potential supply chain disruptions, page 28. Additionally, the use of a single facility in Florida for manufacturing and storage poses a significant risk of supply chain disruption due to natural disasters or other events, page 30. The company's planned growth may also lead to inventory buildup on page 32. Moreover, trade protection and restriction measures under international trade treaties and via tariffs, as well as import or export licensing requirements, can disrupt supply chains, page 35. Overall, these concerns highlight the need for careful management of the supply chain to mitigate potential disruptions and ensure business continuity. That concludes the financial summary for Iradimed Corporation. Feel free to comment below, and I will be happy to answer them when possible.